All right, so today we're diving deep into the world of Dividend Aristocrats. You know those companies that just keep giving back year after year? You've sent us a really interesting collection of articles about dividend investing, some specifics on Dividend Aristocrats, and even the S&P 500 Dividend Aristocrats index page from Wikipedia. It looks like it's updated as of December 2024, so pretty recent. So our mission today is to help you figure out, well, these companies are really worth crowning in your portfolio.
You know what's fascinating to me about Dividend Aristocrats is that they really appeal to something I think deeper than just the numbers. It's a sense of stability and consistency, especially in these uncertain economic times.
Yeah, that totally makes sense. It's like knowing that no matter what's happening out there in the world, you've got this steady stream of income coming in. But before we get too far ahead of ourselves, can we actually define like what makes a dividend aristocrat a dividend aristocrat?
Yeah, absolutely. The Dividend Aristocrats 2024 article, I think, lays it out pretty clearly. To earn the title, a company needs to be included in the S&P 500 index and then also have this track record of increasing its dividend payout to shareholders. And this has to be annually for at least 25 years.
Okay, so it's not just about paying dividends. It's about consistently increasing those payments.
Yeah.
And not just for a couple of years. We're talking a quarter of a century. So that's a serious commitment. But like, why go through all that trouble? What's the allure for these companies?
Well, I think this consistent dividend growth often can be seen as a signal of strong financial health. These companies tend to be large, they're established players in their industries, they often have products and services that remain in demand regardless of the economic climate. So, it's like having a foundation of bedrock beneath your investment.
Okay, so they're reliable. They're like the
Okay.
reliable old oak tree in the forest that weathers all the storms.
Yeah.
That's a comforting thought, especially these
Yeah.
days. But I'm guessing there's got to be more to the story than just stability, right?
You're right. The article is Dividend Investing a Good Strategy? Actually points out that dividends, they can help cushion your portfolio against stock price declines. It's kind of like having built-in shock absorbers. They smooth out the ride during all the market turbulence.
Yeah, that's a really good point. So even if the stock price dips, you're still getting that dividend payment. And that can at least help offset some of the losses. But what about growth potential? Are dividend aristocrats just kind of slow and steady? Or can they deliver some, exciting returns?
It's true that dividend aristocrats, they may not be the flashiest growth stocks out there. High growth companies often reinvest all their earnings back into the business
Yeah.
to fuel, rapid expansion. But that doesn't mean that dividend aristocrats can't deliver, I think, some pretty solid returns.
So it's kind of a trade-off then. You're prioritizing that stability and income over the potential for that explosive share price growth.
Exactly. And we also have to think about the power of compounding. As that same article highlights, reinvesting those dividends can generate really impressive returns over time. It's the snowball effect in action. Your money makes money, and that money makes more money.
Yeah, that's the beauty of long-term investing, letting that compounding magic work its wonders. But how do these dividend aristocrats compare to other dividend-paying stocks out there? Are all dividends created equal?
That's where things get really interesting. While a high dividend yield might seem really tempting on the surface, is dividend investing a good strategy? I cautions that is not always a sign of a truly healthy company. A 6% yield that suddenly disappears next year. That's far less valuable than a consistent 3% yield that steadily grows over time.
So it's not just about chasing the highest yield, it's about finding those companies with sustainable dividend payments.
Yeah.
But how can investors really tell the difference? Are there like red flags to watch out for?
Absolutely. There are certain key metrics that can help you assess the sustainability of a company's dividend. One of the most important ones is the payout ratio, and that tells you what percentage of a company's earnings are being paid out as dividends.
So if a company is paying out like a huge chunk of its earnings as dividends, that might be a sign that it's stretching itself a little thin, right?
Precisely. A high payout ratio could be a sign that a company, it has very little room left for reinvestment in the business, or even for future dividend increases. It's like living paycheck to paycheck, but for companies.
That's a great analogy. So what other metrics should investors keep in mind?
Another really important metric is the dividend coverage ratio, which shows how many times a company could actually pay its current dividend with its earnings. So a higher coverage ratio generally suggests a greater margin of safety.
And what about free cash flow? I always hear that that's like an important indicator of financial health.
Absolutely. Free cash flow represents the cash a company has left over after paying its operating expenses and its capital expenditures. It's really the lifeblood of dividend payments.
So a company with strong free cash flow is more likely to maintain and grow its dividend over time.
Exactly, like having a healthy savings account to draw from.
Right.
And speaking of financial health, we can't forget about debt.
Right. A heavy debt load can put pressure on a company's ability to keep paying those dividends, especially during those economic downturns.
Yeah, that's where the net debt to EBITDA ratio comes in. It helps you understand how burdened a company is with debt compared to its earnings. So a lower ratio generally suggests a more favorable financial position.
So it's like checking the company's credit score before you decide to lend them your hard-earned money.
You could say that. It's really all about assessing the financial strength and the stability of a company to determine the long-term viability of those dividend payments. And that's, I think, a key part of understanding the true value of a dividend aristocrat.
This is all starting to make a lot of sense.
Yep.
So we've talked about stability, we've talked about financial health, we've even got some key metrics to watch. But where do we go from here? Like, how do we actually start exploring these dividend aristocrats?
Well, there's actually a special index that tracks the performance of these dividend-paying champions, the S&P 500 Dividend Aristocrats Index. And as you mentioned, you've even provided us with the Wikipedia page that lists all the current members as of December 2024.
That's right. And before we jump into that list, I think it's important to remember that this is just a starting point. This isn't a buy list. Each company has its own story and its own set of risks and opportunities.
Absolutely. It's so crucial for investors to do their own research. Dig into those financials, really understand the business model, consider the overall health and prospects of each company before making any investment decisions.
So are you ready to unveil the first group of these dividend-paying powerhouses?
Let's do it. But remember, this is just the tip of the iceberg. There's a lot more to explore beneath the surface.
Perfect. I'm ready to dive in. Let's start with the industrial sector. First up, we have A.O. Smith, ticker symbol AOS. A.O. Smith is a leading manufacturer of water heaters and boilers. They've actually been around for over 145 years, which I think speaks volumes about their ability to adapt and innovate over time.
Wow, that's impressive. Next on the list, still in industrials, we have Abbott Laboratories, ticker symbol ABT.
Abbott is a global healthcare company. They're involved in pharmaceuticals, nutrition diagnostics, and medical devices, so their diversified business model likely contributes to their consistent dividend growth.
And rounding out this first group of industrials, we have AFLE, ticker symbol AFL.
AFLAC. They're known for their supplemental insurance products. And of course, those very memorable commercials with the duck. They've built a really strong brand and a loyal customer base, which is reflected in their consistent dividend increases. All right, that's a great start. We've covered the first three companies on our Dividend Aristocrat journey, but there are many more real subjects to meet. Join us for part 2, where we'll continue exploring this fascinating world of these dividend-paying champions.
Welcome back to our deep dive into the fascinating realm of dividend aristocrats.
It's time to dust off our crowns and continue our exploration of these dividend-paying powerhouses.
Indeed. We have, I think, 54 companies left to uncover, so let's pick up right where we left off. We were wrapping up the industrial sector, but before we move on, I think it's worth highlighting a key aspect of dividend aristocrats that I think often gets overlooked, and that is their ability to adapt and evolve over time.
Yeah, you're right. It's easy to get caught up in the image of these companies as, steady and unchanging. But to maintain that dividend growth for 25 years or more, they have to navigate shifting market conditions, technological advancements, even global crises.
Exactly. Take a look at 3M. They were a dividend aristocrat for over 25 years, but they had to cut their dividend in 2024. It's a stark reminder that even these seemingly invincible giants can face challenges, and that investors really need to stay vigilant.
That's a sobering thought, but a crucial one. It really underscores the importance of doing your own due diligence and not just relying on past performance. So with that in mind, let's continue our journey. We're about to move on to the materials sector, starting with Air Products and Chemicals, ticker symbol APD.
Air Products and Chemicals is a global supplier of industrial gases and chemicals. These are essential ingredients for a wide range of industries. This breadth of applications, I think, contributes to their stable revenue streams and, in turn, their ability to consistently increase those dividends.
Next up, we have Albemarle Corporation, ticker symbol ALB.
Now, Albemarle, this one is particularly interesting. They're a specialty chemicals company that focuses on lithium bromine and catalysts. And with the booming demand for lithium-ion batteries for electric vehicles and other applications, Albemarle appears very well positioned for, I think, continued growth.
That's a great point. It's really fascinating to see how some dividend aristocrats are capitalizing on these emerging trends and technologies to really drive their future growth. And last but not least, for the materials sector, we have Amcor, ticker symbol AMCR.
Amcor is a global leader in packaging solutions, providing a wide range of packaging products for various industries, including food, beverage, healthcare, and personal care. This is a sector that I think is likely to remain in high demand regardless of economic fluctuations, so it provides a certain level of stability to Amcor's business.
All right, let's move on to the consumer staples sector, a sector known for its resilience and consistent demand. We'll start with Archer Daniels Midland Company, ticker symbol ADM.
ADM is a global agricultural processing and commodities trading corporation, playing a significant role in the food and beverage industry. Their involvement in such an essential sector, I think, likely contributes to their consistent dividend growth track record.
Next, we have Atmos Energy, ticker symbol ATO.
Atmos Energy is a major player in the natural gas distribution business in the United States. This regulated utility business provides a pretty predictable revenue stream, supporting their ability to consistently reward shareholders with increasing dividends.
And last but not least, for this batch of consumer staples companies, we have Automatic Data Processing, ticker symbol ADP.
ADP is a global provider of human capital management solutions, including payroll benefits and talent management. Their services are really critical for businesses of all sizes, making their revenue streams relatively stable and predictable.
Now let's shift gears to the financial sector, starting with Brown & Brown Inc., ticker symbol BRO.
Brown & Brown is one of the world's largest insurance brokerages. They've built a strong reputation for their expertise in client service, which I think likely translates into consistent financial performance, and of course the ability to increase those dividends year after year.
Next on our list, still in financials, is Brown-Forman, ticker symbol BFB.
Now this one is intriguing. Brown-Forman is the company behind iconic alcoholic beverage brands, like Jack Daniel's Woodford Reserve and Finlandia Vodka. Their consistent dividend growth, I think, suggests that even during economic downturns, people tend to maintain their spending on certain indulgences.
It seems like a little celebratory sip of Jack Daniel's can help smooth out those market moves. And with that, let's raise a glass to the intriguing world of Dividend Aristocrats. But don't wander off just yet. There's much more to discover in Part 3, where we'll meet the remaining members of this exclusive club and wrap up our deep dive. Welcome back to the final leg of our Dividend Aristocrat expedition. We've journeyed through industrials, materials, consumer staples, and even dipped our toes into the financial sector, ready to meet the rest of this exclusive club.
Absolutely. It's been fascinating to see the diversity of these companies, from industrial giants to those consumer staples, all united by their commitment to rewarding shareholders with those consistently growing dividends.
Okay, let's jump right back into our list with the healthcare sector. First up, we have Becton Dickinson & Co., ticker symbol BDX.
BD, as it's often called, is a global medical technology company. They specialize in medical devices, diagnostics, and life sciences. Given the increasing demand for healthcare worldwide, their consistent dividend growth seems to be a natural outcome of their crucial role in the industry.
Makes sense. Next, let's move on to Cardinal Health Inc., ticker symbol CAH, also in the healthcare sector.
Cardinal Health is a major player in the healthcare services and products field, providing pharmaceuticals, medical, and surgical products, and also supply chain solutions to healthcare providers. The essential nature of their business, combined with the complexities of the healthcare system, likely contribute to their stable earnings and consistent dividend growth.
Right, and for a company that probably needs no introduction, Coca-Cola, ticker symbol KO.
Coca-Cola. The beverage giant with a global reach and a portfolio of brands that are recognized pretty much around the world. What's really interesting about Coca-Cola from a Dividend Aristocrat perspective is their ability to adapt to those changing consumer preferences, from diet sodas to bottled water. They've consistently evolved their product offerings, which has undoubtedly helped them maintain that impressive dividend growth trajectory.
You're right, it's not just about staying the same. It's about evolving to stay relevant.
Okay.
Speaking of evolving, let's move on to Colgate-Palmolive, ticker symbol CAL, another household name in the consumer staples sector.
Colgate-Palmolive is a familiar sight in bathrooms worldwide, known for their oral care, personal care, and home care products. Their strong global presence and reputation for quality have likely played a key role in their consistent financial performance, enabling them to reward shareholders with those steadily increasing dividends.
Okay, time to shift gears again. Let's head over to the utilities sector and take a look at Consolidated Edison, ticker symbol ED.
Con Edison provides electricity, gas, and steam services to millions of customers in New York City and the surrounding area. Their regulated utility business provides a very steady and predictable revenue stream, which is a key characteristic of many dividend aristocrats in the utilities sector.
It's like having a captive audience, right? People need those essential services no matter what's happening in the economy. All right, back to the industrial sector with Dover Corporation, ticker symbol DOV.
Dover is a diversified industrial manufacturer with a wide range of products and services. Their broad footprint across various industries, I think, helps to mitigate risks associated with any single sector, providing a level of stability that supports their dividend growth.
Now for a company focused on a different kind of essential. Ecolab Inc., ticker symbol ECL, in the materials sector.
Ecolab is all about water hygiene and infection prevention solutions and services, primarily serving the food, healthcare, hospitality, and industrial markets. It's not hard to see why a company focused on such fundamental needs would have a track record of consistent earnings and dividend growth.
Absolutely, those are needs that aren't going away anytime soon. Let's move on to another industrial powerhouse, Emerson Electric, ticker symbol EMR.
Emerson Electric is a global technology and engineering company. They provide solutions for industrial, commercial, and residential markets. Their focus on innovation and automation, I think, positions them well in a world that's increasingly driven by technology, likely contributing to their long-term dividend growth potential.
Now for a company with a different kind of footprint. Essex Property Trust, ticker symbol ESS, in the real estate sector.
Essex Property Trust is a real estate investment trust, or REIT, that focuses on owning and operating apartment communities on the west coast of the United States. Their focus on a specific geographic region with favorable demographics is a key aspect of their strategy and likely contributes to their consistent performance.
Right, back to the world of global logistics. With Expeditors International of Washington, ticker symbol EXPD, in the industrial sector.
Expeditors International connects shippers and carriers, facilitating the movement of goods all around the world. As global trade continues to expand and supply chains become even more complex, Expeditors International seems well-positioned to benefit, which could support their dividend growth over the long term.
Speaking of global giants, let's move on to ExxonMobil Corp., ticker symbol XOM, in the energy sector.
ExxonMobil is one of the world's largest publicly traded oil and gas companies, involved in every stage of the energy business, from exploration and production to refining and marketing. While the energy sector can be volatile, ExxonMobil's scale and diversified operations have helped them weather those storms and maintain their dividend aristocrat status.
Okay, last one for the industrial sector, and it's another company that's probably a familiar name. Fastenal, ticker symbol FAST.
Fastenal distributes industrial and construction supplies, operating a vast network of stores, and they really focus on that customer service. Their wide reach and customer-centric approach have likely contributed to their impressive dividend growth record.
All right, we're in the home stretch now. Let's move on to Federal Realty Investment Trust, ticker symbol FRT, in the real estate sector.
Federal Realty Investment Trust is a REIT that focuses on owning and operating retail and mixed-use properties in strategically located high-density markets. Their focus on prime real estate assets likely contributes to their consistent returns and their ability to maintain their dividend aristocrat status.
Next, we have Franklin Resources, Inc., ticker symbol BIN-N, in the financial sector.
Franklin Resources is a global investment management organization offering a range of investment products and services to individuals, institutions, and retirement plan sponsors. Their long history in the investment world and their diverse offerings likely provide them with a very stable foundation for dividend growth.
Now, for a company that's a bit more defense-oriented, General Dynamics, ticker symbol GD, in the industrial sector.
General Dynamics is a global aerospace and defense company involved in the design, manufacture, and support of a wide range of products, from business jets and combat vehicles to submarines and IT systems. Their involvement in government contracts, I think, provides a certain level of stability and predictability to their business.
All right, let's move on to Genuine Parts Company, ticker symbol GPC, in the consumer discretionary sector.
Genuine Parts Company distributes automotive and industrial replacement parts, operating a large network of distribution centers and retail stores. Their wide reach and their essential role in keeping vehicles and machinery running likely contribute to their stable earnings and dividend growth.
Now, for a company that's a staple in many pantries, Hormel Foods Corp., ticker symbol HRL, in the consumer staples sector.
Hormel Foods is a global branded food company with a portfolio of very well-known names like Spam Skippy and Jennie-O Turkey Store. Their diverse product offerings and strong brand recognition likely contribute to their consistent financial performance.
Let's head back to the industrial sector with Illinois Tool Works, ticker symbol ITW.
Illinois Toolworks is a diversified manufacturer of industrial equipment and consumables. Their decentralized business model and focus on niche markets allow them to adapt to those changing conditions and maintain a competitive edge.
Now, for a tech giant that's been around for what seems like forever, IBM, ticker symbol IBM, in the information technology sector.
IBM has been a leader in the tech industry for over a century. And their ability to adapt and innovate is a key part of their story. Their long history of dividend growth, I think, speaks to their resilience and their ability to navigate that ever-changing tech landscape.
Okay, back to the world of familiar brands with the J.M. Smucker Company, ticker symbol SJM, in the consumer staples sector.
The J.M. Smucker Company brings us those classic comfort foods: jams, jellies, peanut butter, and coffee. They own well-known brands like Smucker's Folgers and Jif. Their focus on these staple products likely contributes to their stable earnings and dividend growth.
Now, for a company that's synonymous with healthcare, Johnson & Johnson, ticker symbol J&J, in the healthcare sector.
Johnson & Johnson is a global healthcare giant involved in pharmaceuticals, medical devices, and consumer health products. Their diverse business model and long history of innovation have made them a stalwart in the healthcare industry and a very reliable dividend payer.
And they even spun off a new Dividend Aristocrat, Kenvue Inc., ticker symbol KVUE, also in the healthcare sector.
That's right. Kenvue is a global consumer health company that now houses brands like Tylenol Band-Aid and Listerine. It's always interesting to see how these corporate moves can create opportunities for new dividend aristocrats to emerge.
Speaking of familiar brands, let's move on to Kimberly-Clark, ticker symbol KMB, back in the consumer staples sector.
Kimberly-Clark is another consumer products giant, known for brands like Huggies, Kleenex, and Scott paper products. Their global presence and focus on those essential products have undoubtedly contributed to their impressive dividend growth record.
Now, for a company that's a bit more industrial, Lind, PT Cowlance, ticker symbol LIN, in the materials sector.
Lind is a global industrial gas and engineering company, producing and distributing gases like oxygen, nitrogen, and hydrogen. These gases are essential for various industries, providing Lind with a very stable and diverse revenue stream.
All right, time for another trip to the home improvement aisle, with Lowe's, ticker symbol LOW, in the consumer discretionary sector.
Lowe's is a major player in the home improvement retail market, operating a large network of stores across the United States and Canada. Their focus on a sector that benefits from both new construction and home renovations provides them with a very consistent stream of customers.
Now, for a company that adds a little flavor to our lives.
Yeah.
McCormick & Company, ticker symbol MKC, in the consumer staples sector.
McCormick & Company is all about spices, seasonings, flavorings, and other food products. They sell their products to both consumers and businesses, providing them with a diversified revenue base. Their focus on a product category that's essential for cooking and food preparation likely contributes to their consistent earnings and dividend growth.
All right, let's supersize our dividends with McDonald's Corp., ticker symbol MCD, in the consumer discretionary sector.
McDonald's needs no introduction. Their golden arches are recognizable worldwide, and their franchise model has allowed them to expand incredibly rapidly. Their consistent dividend growth is a testament to their enduring popularity and their ability to adapt to those changing consumer tastes.
Last one for the healthcare sector. And it's another global leader, Medtronic PLS, ticker symbol MDT.
Medtronic is a global leader in medical technology, developing and manufacturing a wide range of medical devices and therapies. Their innovative products and services address a variety of healthcare needs, making them, I think, a key player in this consistently growing sector.
Now let's head over to the utility sector and take a look at NextEra Energy, ticker symbol NE.
NextEra Energy is a clean energy company focused on wind, solar, and nuclear power generation. Their position at the forefront of the renewable energy transition likely provides them with some very significant growth opportunities and supports their dividend growth potential.
Back to the industrial side with Nordson Corp., ticker symbol NDSN, in the industrial sector.
Nordson Corporation manufactures dispensing equipment for adhesives, coatings, sealants, biomaterials, and other fluids. Their products are used in a wide range of industries, making their business quite diverse and resilient.
All right, now for a company that's all about steel, Nucor Corp., ticker symbol NUE, in the materials sector.
Nucor is a leading steel producer in North America, operating a network of steel mills, and known for their efficient operations and focus on sustainability. Their position in a foundational industry provides a level of stability that supports their dividend growth track record.
Now for a company focused on another essential resource, Pentair, ticker symbol PNR, in the industrial sector.
Pentair provides water treatment and solutions. For residential, commercial, and industrial applications, their focus on water, a vital resource, positions them well in a world increasingly concerned with water scarcity and quality.
Speaking of vital resources, let's move on to PepsiCo, ticker symbol PEP in the consumer staples sector.
PepsiCo, like its rival Coca-Cola, is a global food and beverage giant with a portfolio of very well-known brands. Their ability to diversify their product offerings beyond just sugary drinks has been key to their sustained success and dividend growth.
Next, we have PPG Industries, ticker symbol PPG, in the materials sector.
PPG Industries supplies paints, coatings, and specialty materials used in various industries, including automotive, aerospace, and construction. Their diverse customer base and essential role in various manufacturing processes likely contribute to their stable earnings and consistent dividend growth.
Now, for a company that's a true household name, Procter & Gamble, ticker symbol PG in the consumer staples sector.
P&G is a global consumer goods giant with a massive portfolio of brands that are staples in many homes. Their dominance in the consumer products market and their ability to consistently innovate have made them a reliable dividend payer for decades.
All right, let's move on to Realty Income, ticker symbol O in the real estate sector.
Realty Income is a REIT that specializes in freestanding, single-tenant commercial properties. Their diverse portfolio and consistent dividend payouts have earned them the nickname the Monthly Dividend Company, a testament to their commitment to rewarding shareholders.
Next, we have Roper Technologies, ticker symbol ROEP, in the industrial sector.
Roper Technologies is a diversified technology company operating in a variety of niche markets. Their decentralized business model and focus on acquiring and growing companies with strong market positions make them, I think, a unique player in that Dividend Aristocrat space.
Now for a company that's all about information. S&P Global Inc., ticker symbol SPGI, in the financial sector.
S&P Global is a financial information and analytics powerhouse, providing credit ratings, benchmarks, analytics, and data to the global capital and commodity markets. Their role as a trusted source of financial information makes them a vital part of the global financial system.
Let's add a splash of color to our portfolio with Sherwin-Williams, ticker symbol SHW, in the materials sector.
Sherwin-Williams is a leading manufacturer and retailer of paints, coatings, and related products. They serve both consumer and professional markets, giving them a very broad reach and a stable foundation for earnings and dividend growth.
And for a company that's a toolbox essential, Stanley Black & Decker, ticker symbol SWK, in the industrial sector.
Stanley Black & Decker is a global manufacturer of tools and storage products, as well as commercial electronic security and engineered fastening systems. Their ownership of well-known brands like Stanley Black & Decker DeWalt and Craftsman gives them a very strong market presence and a loyal customer base.
All right, let's move on to Cisco Corp, ticker symbol SYY, in the consumer staples sector.
Cisco is a leader in food service distribution, providing food and related products to restaurants, healthcare facilities, educational institutions, and other food service businesses. Their vast distribution network and essential role in the food service industry make them a vital player in that food supply chain.
Next, we have T. Rowe Price Group, Inc., ticker symbol TROW, in the financial sector.
T. Rowe Price is a global asset management firm known for their active management approach and their long-term investment focus. Their expertise in managing investments for individuals and institutions likely contributes to their consistent financial performance.
Now for a retail giant that needs no introduction, Target Corporation, ticker symbol TGT, in the consumer discretionary sector.
Target is a national retailer known for its stylish and affordable products, as well as its strong online presence. Their ability to adapt to changing consumer preferences and embrace e-commerce has been, I think, key to their success.
Let's wrap up the industrial sector with W.W. Grainger, ticker symbol GWW.
W.W. Grainger is a leading distributor of maintenance, repair, and operating supplies, serving businesses and institutions across a wide range of industries. Their essential role in keeping operations running smoothly likely contributes to their consistent earnings and dividend growth.
And finally, we've reached the last company on our list, Walmart, ticker symbol WMT, in the consumer staples sector.
Walmart, the world's largest retailer, needs no introduction. Their focus on low prices and everyday essentials makes them a go-to destination for those budget-conscious shoppers around the world.
And that concludes our grand tour of the Dividend Aristocrats.